What is up, YouTube? This is the Working Investor. In this video, we're going to talk about ULTY. We're going to talk about the total returns. We're going to talk about the tale of two cities where ULTY might as well be a different ticker symbol from inception until September 10th, 2024, or should I say until October 15, 2024. And then beyond that, we're going to talk about some cool perks of ULTY when it comes to margin maintenance requirement. We're going to take a deep dive into ULTY and look at their holdings and talk about some really cool strategies that they have on and much more. Stay tuned. So, of course, the number one thing that attracts a lot of us to ULTY is this amazing, they target around 100% distribution rate. So basically, they're targeting 100% yield. And you're getting a whole basket of funds. You're getting a diversified basket of funds. If you're looking at their payouts since inception, they've given 9 payouts since inception, and you could check out on Market Chameleon. They calculated for you very nice. You could see on Market Chameleon that the total amount of payouts that they've given to date since inception is $9.30, and of course they started off as a $20 stock. And this is what freaks a lot of people out. They see it started off at $20.42, and it looks like it's just going down and down and down. But if you look a little closer with magnifying glasses, you'll see that it kind of pressed the brakes. It was going off a cliff, and then, August, and then September. I would say around, September 10th from here, it's been kind of changing course. It's been kind of flattening. It hasn't, this steep decline started changing. It looks like they were trying to figure out how to run this kind of fund. And then, of course, October 15th, they have a new prospectus change where they can pretty much do anything. What I understand is like they can pretty much do almost any strategy that you and I want to do as traders. And you see it's been more range bound since this time. So let's take a look. Let's take a look at the total returns from the beginning until September. You'll notice I noticed a big difference September 10th, and then from September 10th all the way down till contemporary now, right now, December 9th. Let's take a look. So here you have Seeking Alpha pulled up for you guys, and this is the total return specifically from the dates. If you go to date bound, it's from September 10th till December 9th, 2024. And then you could see here the total return was, I just messed it up. It was around 22%. This is the total return since inception, which is 6.58%. And most of that positive number came from the most recent few months. If you look at the pre this timeline, let's just close this out over here, and we can go to ULTY. Now, this is the total return from inception until September 10th, and you'll see that it was a negative total return of 13.13%. Now, my caveat is that even though it's a negative 13.13%, that this puts into assumption that somebody put in all their capital into ULTY from the time of inception, never bought anything else, and didn't buy an opportunistic ex-dividend dates, when it dropped in price or any other price drops. But if somebody did those, their total return may be a lot less. And remember, it paid out $9.30 total. So of course, worst case scenario, if someone bought it at $20.40 something cents, they're only, they may be roughly by this point, maybe 50% ROI. And that's like a worst case scenario. So let's take a look at the holdings of ULTY. Now, I did say I'll look at the strategies, but there's only so much I can put into this video. So we'll just look at the holdings for now, but you can see they have multiple strategies in ULTY, but the number one thing is to look at the underlier as well. And I highlighted in green, basically overlap what YieldMax has in their cover call funds that ULTY contains. And I highlighted in light blue the triple leverage products that they have, and some of them are broad-based index products. So of course, we'll just quickly go down the list. They have C3 AI, so they got some AI sector. They got playing with Abercrombie and Fitch. Alibaba. So we got some China, China. And look at this interesting company, Kava. I actually saw a whole news segment on Kava. It's like basically, it looks like sort of like a cousin to Chipotle. And this stock has been just going crazy. Let's take a look at this company for a second. So Kava is like a Mediterranean twist on Chipotle. You have these, it looks like the American fast food. People are kind of wanting to have healthier, fresher foods with fresh salads and some, protein, plant-based protein or meat-based protein. People are trying to go for more of a delicious and healthy way of eating and don't want to compromise, and they still want the convenience of fast food, and that seems to be a very good business model. And if you look at the stocks recently of Kava, it's just been soaring. So Kava came out, it was launched as a public IPO June 15, 2023. And look at this, from $42 to $150. Year to date, it's up 253%. In the past 1 year, it's up 300 and year over year, it's up 312%. If you just want to look at the last month, it's up 7.84%. This thing is just tearing up. I also took a look at Google Finance to pull back the numbers behind Kava. Again, nothing here is financial advice. I'm not telling you to pick this underlier. I'm just trying to show you my observations. Everything here is for entertainment purposes only, educational purposes only. You need to do your own due diligence and consult who you need to consult, lawyers and accountants and tax advisors, and make adjustments based on your personal risk and risk tolerance. Anyways, with that said, you could see here that thing is just going crazy. If you look at Google Finance, you could see here again, the blue is the revenue, the yellow is the net income, and you could see that they went from net income negative in 2021, 2022, and now in 2023, and of course 2024, they flipped over, into positive net income. That's awesome that their net income is up. And if you look over here at their balance sheet, you could see their total assets versus liabilities. You could see that they do have, the assets surpass their liabilities. So they're doing fantastic. It looks pretty, these numbers, the charts look good. Let's just put it that way. The cash flow is up a little bit. If you look at the quarterly, they went from a negative cash flow to less negative cash flow to flipped over to positive cash flow. Maybe that's why it's starting to explode. They have 8,100 employees. They've been around since 2006. I think they're like a subsidiary of Zoe's Kitchen. Let's take a look. Yeah, you could see here on the description of Kava that the Kava segment represent. So basically it's like their segments are Kava and Zoe's Kitchen, and I've heard of these places. They're pretty cool. Anyways, just wanted to let's go back into the holdings of the ULTY. So yeah, you see they trade a lot of momentum. So of course they have Coinbase, so they're trading Coinbase in their ULTY style of trading. They have CrowdStrike, Dell Computers, Dollar General, Trump Media, Elf Beauty, Hims and Hers Health, Lululemon. They got all kinds of stuff. Retail, crypto. You got Mara, which is a crypto miner. They have Mongo. They have Moderna, so they're in the the biotech space. MicroStrategy, who you gotta love MicroStrategy with all their amazing premium you can get out of that. Micron, Nike, and then of course you see in Nvidia. Palantir now is part of the Yomax Cover Call Fund, so they have Palantir as well. Sentinel-1, Samatech, Snowflake, which I know is part of the AI, movement as well in Snowflake. So here, look at these crazy, amazing, triple leverage ETF. So you have Soxel, which is a triple leverage bull semiconductor, of course, symbiotic, but you also have TNA, which is a triple leverage Russell 2000 small cap. And then you have the TQQQ, famous TQQQ, which is the ProShares triple leverage bull Nasdaq. Of course, they have Tesla. Tesla just popped up recently over the weekend, overnight. They got Upstart. They have Vertiv and Vistra. So yeah, they got a lot of interesting, and they change, from day to day, week to week. They change. They have, they're able to change things around if something doesn't work out, or so that's really really cool that they have these crazy momentum plays. Now let's talk about another really cool positive thing about ULTY. And again, I'm kind of, I like ULTY. I'm cautiously optimistic. I'm not telling you anybody else to go into ULTY. This is my personal choice, my personal journey, my personal risk. But let's look into some interesting view of ULTY when it comes to margin requirement. Because when you, like, if somebody's using margin, there's something called buying power reduction, and that gives you how much can you invest, right? So if somebody, and I have to credit from the Kamira's Discord, one of our members actually mentioned this up, so they got to give credit to one of the members that brought this up. For example, look at these triple leverage products: ProShares, TQQQ, TNA, and Soxel. If you go on Robinhood, you'll see that there's 75% margin maintenance, right? So it kind of limits your how much you want to scale it. If you want to scale, it's going to suck up a lot of margin maintenance. If you go on Misty, it's about 60% margin maintenance. Actually, what I've noticed is ULTY used to be 30% margin maintenance. Now they're 35% margin maintenance. So why does this matter? Because it hampers how much you can invest. Because let's take a look over here. So you could see over here margin maintenance of Misty 60%, right? So so um so basically, like, if ULTY is about roughly half that, let's say ULTY was 30% margin maintenance, that means that you can buy, double the amount of ULTY for the same amount of buying power than 1 unit of Misty, right? So it gives you more ability to buy more. And the cool thing is that ULTY has a lot of implied volatility built inside of it. It has these crazy high implied volatility, or like, let's take a look at TQQQ, right? Let me just give you an example. It's 75%. All the triple leverages are 75%. You see, 75%. I'm talking about margin maintenance, right? 75% margin maintenance. So trading this within the package deal of ULTY, you're getting these crazy high, because remember, they're playing the high volatility players out there, high momentum, high volatility, high volume. So normally doing this yourself, it would cause a lot of buying power reduction. So you can only scale it so much. But having this package with an ULTY, like 35% margin maintenance in ULTY, I can, 35 plus 35 is 70. So I can have double the amount of ULTY, exposure, and still target 100% yield than, trading TQQQ by myself. If I get assigned the shares, then it's going to reduce my, even if you put on the cash secured put, it's still going to reduce buying. It's going to cause buying power reduction. So that's a really good, cool use case that, you have more buying power if you are a margin user, right? So you can scale it a lot more. And it makes sense, because even though, each item in itself is very volatile, but when you look at the whole package of ULTY, then, the package has a lot of diversification. But I wonder if, Robinhood will, like, literally noticed overnight that they changed it from 30. I'm kind of upset about that, but, that's the risk. That's the risk. Any type of underlier, any brokerage has a right to, at any point, I would imagine, have a right to change their margin maintenance. They bumped it up to 35%. I guess they figured out, or maybe it depends on what they had inside of it at the moment. So I wanted to talk about something called range bound high yield dividend ETFs versus high yield dividend ETFs, such as, for example, Clip. I don't, again, no financial advice here, that are just going down and down with no sign of changing course, right? So what's the difference? So things that are range bound, it's okay. If something, I mean, in my opinion, if something pays, if ULTY pays 100% dividend yield and it remains in this range bound between $9 and $11, again, I don't have a crystal ball. It could always change and go down really quick in a crash. Who knows? But you know, if I see, if I it gives me confidence to invest in it, because if I see it's range bound, then even if it's down, 4 or 5%, in price value, in the past few months, but it gave me a 22% return, right? Since we saw that since September. So September to October to November to December, it's 3 months. So let's say you multiply that by 4 to, if you want to, maybe if you want to extrapolate for a year. So 22% annualized return, times 4 is about 88% annualized return, and let's say about a 5 to 6% drop in price. If you want to magnify that, times 4, if you want to, again, so that's like about 20 to 25, 20 to 24% drop in price. So if something dropped 24%, but I got a 88%, again, the total return, and it pays about 100% target. So, my total return will be somewhere, 88, or it could be somewhere between 75 to 88%. I'll take a 75 to 88% total return any day. But when I see something dropping further down and down and down with no change, it's not pressing the brakes. Let's say this targets 60% yield, right? So you're starting off, you're getting 60% yield on 24%, on $24, right? Cool, very cool. But when the price keeps going down, man, it's like $10 and you're getting 60% yield on $10, you're getting about, it's a lot less. And then what happens when there's 60% yield on $1 when it goes down to one? Let's say it doesn't reverse split. It's just your yield on cost, your actual yield on cost that you're getting, your effective yield is getting less and less. Even though the dividend yield target is may stay the same, your effective yield may get less and less. It'll dwindle down. You know what I mean? So that's why I don't like funds that just keep going in one direction. I like funds that, obviously, the best case scenario would be like what Misty was doing, where they just go up. You get your big, fat, juicy dividend payout. And again, who knows what's going to happen tomorrow, whatever. There's no knowing. But those are awesome. This period of time is awesome that you're getting a $4 dividend. And then within a day or two, it pretty much, the price dropped by $4. And then within a day or two, it went right back up, and you pretty much 100%, recovered from your entire dividend payment. But funds that are one direction, no. But that's why I'm cautiously optimistic with ULTY, because I'm noticing that it's literally like it looks very scary, but if you look in the past, you see that it's starting to flatten out a little bit. And I don't mind, again, I'll take a little drop, in the past, like you look at the past 3 months. Overall, I'm not going to lie, you can see that it's down, about 2% in the past 3 months. But I'll take a 2% drop. I don't really like a drop, but I'll tolerate a 2% drop if it's paying me out. Over the past 3 months, it dropped 21 cents, but if it paid 80 cents and 70 cents or 90 cents, in the past 3 months, that will definitely cover for that 21 cent drop. So that's what I wanted to make. That's why I'm I'm cautiously optimistic. I'm getting in there little bit by little bit. So in summary, basically I call the tale of two funds. From September, you could see the total return from inception 6.58%. Total return, it was negative from inception until September 10th. Negative 13.13%, positive from September 10th to December 9th, 22.69%. Like I said, your performance can significantly vary on your purchase targets. You're going to buy them on the not on the peaks. You're buying them on the troughs. And then like I said, we mentioned the range bound versus steady decline. We mentioned the benefit of the margin requirement, the cool benefit of it, and we went to a little deep dive of the holdings. Let me know what you think. Right now, for me, it's a buy, but I have both eyes wide open. Cautiously optimistic. I'm pretty optimistic, but I'm definitely kind of getting in piece by piece. If it still meets my thesis, I'll keep going in. If not, I'll probably hold, or maybe if it completely goes opposite, I may have to get out. But I'm more on the optimistic side. Let me know what you guys think about ULTY. What's your thesis? Why do you like it or why do you dislike it? This is the Working Investor over and out. Have a wonderful trading week.